Been a while. Uploads have been slow recently due to the birth of Lube's baby girl. I want to start a video series on ESG investing, short for environmental, social and governance. ESG investing is just like teenage sex. Not sure how many are doing it, but everyone is definitely talking about it. Today I am going to provide an overview on the current status of ESG investing in the equity space, express my takes on this somewhat controversial concept, and lay out a few interesting ESG investing angles which I think could be highly meaningful and rewarding going forward. Before diving into the discussion, if you want to get some basics on ESG investing, I recommend watching the video posted in the description below. ESG investing is the mainstream approach to sustainable and ethical investing which has gained broad popularity in the investment world in recent years. As an institutional money manager, I am seeing investors of all kinds increasingly prioritizing environmental and social impact goals in their portfolios, especially in the equity space. However, the transition to ESG in the equity space is still in its early innings. I estimate that only 5% of global equity mutual funds and ETFs are currently in ESG funds. Thus, large ESG flows are still ahead of us. At the same time, the valuations of most the ESG-friendly sectors are still consistent with or only slightly higher as compared to the broader market. Therefore, I believe continued ESG transition could lead to meaningful capital inflows to certain ESG-friendly sectors, especially water utility and renewable energy, resulting in meaningful upward price movement. While I believe ESG-friendly practices will in general create long-term benefits to business fundamentals and reduce long-term regulatory and legal risks for companies, many ESG skeptics argue that investors have to make trade-offs due to generally weaker near-term fundamentals and higher valuations, thus lower expected returns when investing in ESG. As a savvy investor and dad, I hate to make trade-offs and I do not think we need to do so. Many of friends told me that when your child is born, your priorities will change. I don't 100% agree. I think I just need to find better alignments between my increasing numbers of priorities. Then it is GG, well played. Similarly, I think the key to ESG investing is to find the places where ESG goals and companies' near-term fundamentals are highly aligned. Speaking of which, I think China is one of the places as the key focuses of its infamous 5-year plan are highly aligned with ESG goals. As such, I think China will be the market where the externalities of ESG-friendly products and businesses will be efficiently converted into monetary fundamentals for the companies in light of how things work there. In the future videos, I will discuss in details why China is the best market to implement ESG investing and how we are doing it. In terms of other interesting ESG investing angles, one of the major shortcomings of ESG investing is that it is not standardized at all. Different institutions are using varying criteria for ESG. The answer is to build a simple, logical and scalable standard for ESG investing and systematically implement it in your investment and portfolio construction process. We are currently doing this for our crypto portfolios, and I will share more details in future videos. I will also put up single stock pitches in the water utility and renewable energy space which I think are best positioned to benefit from the upcoming ESG transitions.